What's up, you guys? Trader here, and welcome to another trading analytics video. So there's some interesting movements going on in the market overall the last few weeks, and I think heading into the last bits of big retail earnings season, we're gonna get some major moves as the market settles itself up, ramping up for the election cycle. But before we get into that, if you guys haven't already, like, comment, and subscribe to the channel if you enjoy this type of content. It really helps us out a ton. So please be sure to check that out. We're also linked to our Discord is in the description of this video, as well as in our channel bio. So feel free to check us out over there as well. Now, as you guys can see on my screen, one of the tickers I'm actually paying heavy attention to heading into this week is FedEx. So actually, in our Discord server, I just previously mentioned, we had talked about FedEx on our weekly watch list last week for a potential gap fill down to the 270s to close some lower price action areas on the daily. And looking at here on the 4-hour chart, you can see what kind of played out here. We have a 4-hour head and shoulders into a breakdown below a key resistance point at 282. And upon market open on Friday, we just saw massive selling on this ticker. And you see that we're actually midway through that gap fill that we had outlined in our weekly watch list, right? We're at 277 as of the close of the market on Friday. Now, what I would like to see happen on FedEx is some continued downside heading into earnings. I do think that 257 zone is going to be a key support area for the ticker, especially as we have earnings heading into the end of September. But I do think a big portion of things are going to play out in this is one, we have Fed Powell speaking at Jackson Hole later on this month. And, last year, or last couple of years, I should say, he's been pretty volatile when he's gone on to that platform. Right. But with FedEx and the overall retail sector, we have Walmart and Home Depot reporting this week. In the coming weeks, I think that FedEx is going to see some continued downwards pressure as sellers are like, hey, we're going to play out this chart pattern that's forming on the longer time frames, heading into the next level of support, which will not be here until about 270, the 270 zone to be exact. Right. That was our last bit of resistance and support here, 272. And if we lose this 272 zone, that gap fill is going to be closing very soon. So that's something we're going to keep an eye out there. Again, we mentioned this in our watch list in our Discord server last week, and it's been playing out beautifully. Shout out to Momentum Trades, one of our traders in the server for that. Now let's jump over here to another ticker that I was actually eyeing, and that I just mentioned briefly was Home Depot. So if you look at Home Depot, you see something similar to what we see with FedEx, right? We see a bearish pattern overall. We had a bit of a double top here. If we actually jump over to the daily, you see a little bit more clear as to what I'm outlining here. So we had a pretty major resistance at 371. As you can see, we had seen several bounces and a breakout from that level before. And we have had a hard time getting candle close above that since. So it's been about 4 months since we had any candles above the 371, 372 zone on this ticker. And as you can see, we rejected from that level into a massive double top, broke down, and now we're sitting at 348 on the market. Now, here's the thing, 348, 350 is actually a key support on this ticker. You see, we had a nice bit of bounces from there before, a little bit of rejection previously a few months ago, and we had a gap down from that zone before we broke through and had a breakout into the double top that we currently had on the chart. Now, we're at 348 as of end of day on Friday. And if we're not able to reclaim 350 with strong candle closes above, at least on the 4-hour time frame, then it's very likely that we'll see a rejection from 350 to bring us down to close this gap here at 324 in the coming weeks. Now, here's something that can throw a wrench into that plan is this big old E we have here on Home Depot. So we have earnings for this ticker on the 13th. So it's going to be a very interesting Monday and a very interesting Tuesday for the ticker. But I think once the news comes out of earnings, depending on if it beats very significantly or if it misses significantly, we'll either get that downward gap fill very quickly, or we'll get that candle close above 350 to see and get a retest to see if that's going to hold as support. But in either scenario, I do believe that gap fill to 324 is going to come in the next few weeks. I would say no more than 3 to 4 weeks based off of how the price action has been playing out on this ticker. It's something to be on heavy watch as well. And the last ticker we're going to take a glance at is Walmart. So Walmart actually is another interesting ticker because another large scale bearish pattern has been forming overall. Like I said, this whole thing, like the entire retail sector has kind of been seeing this pattern form. And the overall market we saw had that play out a few weeks ago, I think about 2 weeks ago, with SPY had a massive head and shoulders on the daily and the weekly. And we had the biggest selling that we've seen in the market all year, last 2 weeks. So looking at Walmart's chart, we had a nice bit of a breakout a few months ago, heading into the May, June months. Bit of a earnings bump from last year, right? Not last year, last quarter. That saw us run all the way up to highs of $72 per share. And right now we're trading about $68. Now, here's the key thing. We have curled down. We lost the key resistance zone at 69, and we're now retested. We have retested 66.75 twice, and we bounced off of it on this secondary occasion, right? Now, what makes this chart very interesting for me is similar to what I outlined with Home Depot, is that loss of this support here at 66.75 is likely going to lead to a retest of the next key area of support, which isn't until about $61 per share. But we have some minor support at 64 and 62 that the ticker could actually see a bit of interperiod price bounces from, heading into its earnings this week as well. But I'm of the belief that, similar to Home Depot, the earnings just going to give the volume needed for the ticker to see the ultimate move that it needs to move. So those are the three tickers I'm kind of watching into this week. I do think that, along with the overall total market, SPY, QQQ, we're going to have some interesting activity. I will say this, though. SPY still has some room to run, and we'll jump over that very, very briefly. Has some room to run to the upside to about 538 on the chart before that right shoulder starts to form on this chart here, right, on the daily and the weeklies. So if you look at the 4-hour here on SPY, you'll see that I have 538 as that key target area, which would probably put us in line with this, not only this resistance zone, but the downtrend line I have drawn out as well, to put us on the path for further downside once we hit that 538 zone. So I think we're going to pop up a little bit more in the overall market before some downside, and that's going to coincide with the downside patterns that I outlined on Walmart, Home Depot, and FedEx as well. So that's what I got for you guys today. I've been Trade Runner. Thank you guys for watching. The link to our Discord will be in the description of this video, and we'll see you in the next one. Later, guys.